Another exciting episode here on the Professional Edge. We're talking about the golden ticket. Well, as we start 2023, we have some decisions to make to acquire that golden ticket. It is not chance like Willy Wonka, but it is a decisive action to move forward and attain your own golden ticket. All it takes is your own personal action to attain that golden ticket. So let's talk about it. Well, the golden ticket is making sure that you do not disinherit your kids. So how does that come into play? Well, half of the listeners here on the Professional Edge have no estate plan whatsoever. That's remiss on your side if you've been a listener here on the Professional Edge for north of 5 years and you've not taken that into consideration, or you have an old will that was drafted when the kids were born and now you're watching them graduate from college. This is your wake-up call to take action and get your golden ticket and get your estate plan updated and completed. We've talked about this scenario at nauseum here on the Professional Edge. You got to get your estate plan done. Well, the incentive for a listener here on the Professional Edge is to go to Echo Mary Charlie. That is emcthebundle.com. Because in the prior sessions of the golden ticket, we've talked about your Social Security calculation, your retirement cash flow, when makes the most sense for moving things around in the portfolio. Have you received your 1099 and now you're going to pay some taxes on a declining portfolio that you never moved around or had any capital transactions? That right there is a wake-up call. You're not receiving the coordinated tax advice that you should be receiving. It is not a separation of services anymore. When you think about it, any financial decision that you make involves taxes. So why wouldn't you be receiving licensed tax advice when you're making this financial decision within your portfolio? Well, you can, and that's what we offer our clients at Estate Management Counselors. So again, dropping back to the estate plan. Think about this. Your largest financial asset is normally your 401k. Well, that 401k is designated or controlled by the beneficiary designation. So if you have named your spouse as the primary beneficiary, and a lot of our listeners don't really remember naming their primary and contingent beneficiary, so that's one thing that we double check during our initial consultation is who actually is the primary and contingent beneficiary. Now here's how it happens that you will disinherit your children on that 401k. Round numbers, you have $1 million in your 401k, primary beneficiary spouse, contingent blank. Wow. Okay, date night, lo and behold, you both don't make it home, then it's going to go to the contingent beneficiary. Well, the contingent beneficiary is blank, so therefore the default is the estate. You just blew a substantial tax plan because the Internal Revenue Service says that that plan must be distributed now within 5 years date of death. Period. Done. It's going to go to the kids. So with that, you lit the tax time bomb and gave no ability for further tax deferral on that $1 million. So you have 2 kids, you're going to split $500,000, and basically $100,000 per year is going to go out as taxable income to each of those kids. Now, let's say the kids are 8 and 10 years of age. Guess what? It gets forced out, they pay tax on it, and that money then sits in a trust fund for when they turn the age of majority because you failed to do your planning. So you're going to have an 18-year-old or a 21-year-old, depending on the age of majority in the state in which you reside, receive this lump sum amount. Guess what? That is another stick of dynamite that you handed to them lit. Because how many of us made or would have made good financial decisions with, call it $250,000 at the age of 18? Most of us would not. We are not mature with regard to money and financial decisions when we are that young. So there's a way around that to where, we cloak the money in a trust. They receive it, they pay tax on it. but we're not going to give them unbridled access to those dollars. We're going to allow them to make a down payment on a house, buy a college car, pay college tuition, pay for health care, but we are not going to allow them to have access to that other than for productive reasons until, let's say, a starting age of 30. So if that's of concern to you and you have not put that in place because your contingent beneficiary is your children, then it's a wake-up call. You are not in receipt of the golden ticket as it applies to your 401k. This is the same scenario on your IRA. You're retired, you have a self-directed IRA, primary beneficiary, wife, contingent beneficiary, 2 kids. Again, it goes out to them at the age of majority if you have not done any additional planning for that. So let's turn to the topic of disinheriting your kids. Okay, here's what happens. We have that $1 million self-directed IRA. Primary beneficiary is going to be your spouse. Okay, guys, unfortunately, our numbers come up first, so we pass away. Who is going to inherit your IRA? It is going to be your spouse. Going to do a spousal rollover and continue the tax deferral. Perfect plan. But think about this. As we live longer, then there is a higher probability that your surviving spouse, your wife, is going to get remarried. And that new husband, I call H2, the plan normally ends up being, because nobody's really watching what's going on, the new husband may say, hey, I have an incredible stockbroker. Let's move your account over to this new stockbroker to utilize my guy. Well, the wife sometimes doesn't understand finances as well as they should, so they just say, perfect, okay. Don't even think twice about it. But on the beneficiary designation on the account application, guess who is named as the primary beneficiary? H2, husband 2. Well, because that's part of the plan, and no one, being the stockbroker, is going to give you counsel and advice, tax-wise, that's number one. And then number 2, they're not licensed to give estate planning advice. So they just sign up the spouse, H2, as being the primary beneficiary. So when we track these dollars and then now the wife passes away, out comes the kids of the first marriage and say, well, Dad worked 30 years at the company and he had a pretty substantial 401k. We talked about that. When Mom survived Dad, she rolled that over into her name. And they live pretty modestly, so there should be a substantial amount of money within Mom's IRA rollover, which was Dad's money. So we're looking to receive that. Well, they call the stockbroker. The stockbroker says, may want to talk to your attorney on this. So they go to the probate attorney. The probate attorney goes, well, let's see what the document says, and he does not refer to the will because the will's not controlling because there's a beneficiary designation on this IRA. And we go ahead and look, and the document that the estate attorney is looking at pulls the beneficiary designation, and lo and behold, H2 is a primary beneficiary. Well, H2 then gets to do a spousal rollover, and H2 is not legally obligated to leave anything to the children of the first marriage. Yeah, that gives me reason for pause and need to clear my throat because you just disinherited your children. Lo and behold, no tax planning. The stockbroker is going to say, well, that's part of estate planning. You should have coordinated that, or Mom should have coordinated that with her estate planning attorney. And then the stockbroker is also going to say, well, that's tax planning. You should have talked to your CPA and addressed how that tax plan is going to lay out. So the stockbroker just says, well, that's what the wife wanted. That's what Mom wanted on that beneficiary designation. Not that they just did it by default. So you, as a child of a listener here on the Professional Edge, I think you might want to double check that. Make sure things are copacetic if mom has remarried or dad has remarried, who the primary and contingent beneficiaries is or are on those assets, because those supersede whatever is in the will. So a lot of individuals just get busy with life and don't really walk through the scenario, and we're seeing more kids being disinherited from the family's hard work. So do you think dad, who passed away first, had any intention of disinheriting his children? Well, no, probably not. He had the complete intention of providing for the surviving spouse and then the remainder balance going to the children. But lo and behold, he never set that up to guarantee that that was going to transpire. So the golden ticket, you have to address who the primary and contingent beneficiaries are, and we can basically secure this so the surviving spouse has access to these funds. But if the surviving spouse gets remarried, then these assets will not go to that new spouse. And therefore, the chance of disinheriting. I don't like leaving $1 million up to chance, up to the kindness and goodwill of the new spouse. Why don't we secure that? Being a tax attorney, we can draft the proper documentation, coordinate that with your financial assets to make sure that your estate plan is coordinated with your financial plan. That's what we do at Estate Management Counselors. It's a pretty unique opportunity for you as a listener here on the Professional Edge to get this all coordinated. It's one set of professionals, a tax attorney, a CPA, and a certified financial planner. One place, one set of eyes, one set of professionals that will guide you to make sure that you do not have the chance of disinheriting your children. So kids, it's a wake-up call to have a conversation with mom and dad. Hey, dad, mom, how are things structured? Well, those are going to say mom is the primary beneficiary, kids are the contingent. That right there is enough for you to make the call to 877-654-9798. That number again, 877-654-9798, because there is a very high probability that you will be disinherited on those retirement assets. That enough is substantial. So get your golden ticket. Make sure that there is not a chance for dad to disinherit you, or mom, if she was the executive, on disinheriting you from the family money that everyone has sacrificed, because we all know the only way you have those assets is because you have put off some spending, you have some savings. So let's guarantee it goes to the right person at the right time in the right amount. The only way you can do that is to properly structure the beneficiary designation on those retirement assets. Again, primary beneficiary being spouse, contingent being kids, that is a wake-up call. So let's guarantee that you're not going to get disinherited. And kids, you have a vested interest to help mom and dad, or to prompt them to have a conversation with us at Estate Management Counselors. And that number again, 877-654-9798. That number again, 877-654-9798. I appreciate you listening here on the Professional Edge. My name's Sean Todd, tax attorney, CPA, and certified financial planner. The other incentive for being a listener here on the Professional Edge, I always need to mention this to you, is visit our site at emcthebundle.com. That is Echo Mary Charlie thebundle.com. It's an incentive, basically drastically reduced price for our listeners here on the Professional Edge to get your estate plan done. Number one. Number two, to get your financial assets in the right account, right amount, understand your risk assessment, and then number three, do some additional tax planning. So again, visit emcthebundle.com. That is emcthebundle.com. Thanks for listening to the Professional Edge.
With today's financial markets, are you getting the personal and professional attention you and your money deserve? Clients of estate management counselors benefit from having one set of professionals advise them on their tax, estate planning, and investment advice. We call that the professional edge. Sean Todd is a tax attorney, CPA, and certified financial planner. With over 15 years' experience, he welcomes the opportunity to assist you in preparing for retirement, implement effective tax planning strategies, and to help you properly plan your estate. His radio show, The Professional Edge, is aired weekly on Sundays at 9 a.m. If you're interested in meeting with Sean, call his office at 877-654-9798. That's 877-654-9798. Do you want to feel more confident about making the right investment, tax, and estate planning decisions? Today, these decisions are more complex than ever. Have you thought about working with a professional advisor and not sure who to turn to? Not sure what qualifies one to be an advisor? Sean Todd is more than qualified as a tax attorney, CPA, and certified financial planner. Sean is with Estate Management Counselors. Estate Management Counselors operates as an independent fee-only investment advisory firm. They're dedicated to gaining a personal understanding of their clients' objectives and implementing professional counsel and advice to achieve those objectives. So take a second to talk with Sean Todd to learn how you can benefit from their multidisciplinary practice where they coordinate their clients' legal, tax, and investment strategies into one comprehensive and integrated plan to enhance and protect their clients' financial security. You can reach Estate Management Counselors and speak with Sean Todd by calling 1-877-654-9798. That's 1-877-654-9798.
Is your 401k beneficiary correct? Having the incorrect beneficiary could cost you thousands in unnecessary taxes, and even worse, disinheriting your own kids. Hi, this is Sean Todd, tax attorney, CPA, host of the Professional Edge radio show, aired Sunday at 9 a.m. Not sure if you have the correct 401k beneficiary? Visit emcthebundle.com. That is emcthebundle.com. Again, emcthebundle.com.